Hello, I'm Alec Hogg, and we are ready for our Rational Radio webinar today. It's Monday. We do this every Monday at noontime, and I see we've got a little bit of noise coming from the Shapiro household. No problem. I'm sure you'll find a way to mute it in a moment. But before we go into that, Stuart, do you want to just give us a little bit of back? Sorry, no, David. It's making a bit of a racket there. Okay, that sounds a bit quieter. Stuart, do you want to just take us through the technicals, please?
Excellent, thanks, Alec, and welcome, Dave. For those new to the webinar, you can see Dave and Alec on screen and then a little presentation of me. Can you give us a high five? There's a little high five button on your control pad on the right-hand side. And if you can hear my voice clearly, if it's a bit soft, let us know. Alec can lift his audio on his side. Got a few high fives, not as, there we go, the sun's come through now, that's great, good to see. And Alex likes to keep it quite conversational. The little questions dropped on the control panel as well. If you put your question.
I think we're losing, Stuart, I think we're losing. I'll tell you what, it's I'll just take you through that. I've done it enough times, or rather I've listened to Stuart enough times. We are this is an interactive webinar. We'd like you to participate. If you have a look on your screen on the panel, you will see that there is a question, a little question mark. If you click on that, you can pose your question to us. So that's the whole idea here. Today we've got David Shapiro, as always, sitting happily in his. Are you upstairs, Dave? Where you spoke about you are. Okay, so when your tea gets delivered, when we hear the noise of Linda walking up the stairs, is that
exactly?
We're not talking about tea today. We're talking about a very, very busy time on the American markets. Apple's share price up 10% on Friday after its financial results. Did you have a chance to have a look at them much, Dave?
Of course, you know, all of them. I mean, from Apple, Amazon, Alphabet, all the results have exceeded expectations. I think Facebook as well. Facebook also, the surprise, just shows you, Alec, how powerful these organizations are and how this lockdown has helped them. Even in Apple's case, I think one of the surprises that came through Apple was the demand for their phones in China, you know, which has always been a difficult area for them. But I think it was across their whole range of products that they surprised on the upside. But it applies to all the companies. The only one that disappointed, and in fact, the economist this weekend addressed the issue as well, was Alphabet, where, you know, according to the economist, and the story is that they're reaching middle age. You know, they're not as powerful as they used to be. Competition coming, also the money spent on other products, perhaps not giving the kind of returns that they used to. But, you know, they YouTube. I find it difficult. I'm not quite prepared to accept the argument yet. But, I mean, all four businesses, and if you add on Microsoft as well, have done incredibly well. And, you know, justifiably, share prices have gone up, and that's why they're dominating the global markets. The US markets. That's why they're making up such a large percentage of the market cap there. The argument, and I'm going to bring it up, is that are valuations too high? They're not outrageous. They are high. They are stretched. But Alec, the counter argument is that they're still going to grow double digits for the next couple of years, and that gives them a time for earnings to catch up with share prices as well. So, you know, the point is, I'm still sticking with them in these kind of conditions.
You can see on screen we've got the graph of Apple, and this is a one-year graph. A really big jump at the end there on the financial results, 10%. Not often you see $180 billion. And let that sink in. $180 billion added to the market cap of a company in one day. Now, just to put that in perspective, South Africa's GDP, in other words, all the money spent in this country in a year, is $350 billion. So this is like half of South Africa's GDP value to Apple on one day. Were the results spectacular?
You know, they were good. But the problem is that's what we're getting now with markets, is that today when you beat expectation, you're getting this massive increase. When you don't, when you miss it, when you miss guidance, the other thing happens, as we've seen with Netflix and some of the other shares like Alphabet as well. Alphabet was down about 4%. But I think Apple surprised. I think it was a surprise only because no one expected demand for their products to be as high as they are. And it didn't only extend to the iPhone, but to iPads, the pods. These are phone pods and that, but to AirPods and all the other products that they develop, as well as their apps. The apps is a very, very big business. They're coming under a lot of pressure for their apps, but look, it's an incredible business, and I'm just staggered at how things have changed within the last decade or so. It's a little over 10, or I think it's about 12 years since Steve Jobs introduced the iPhone, but how this company has changed and how it's changed our lives with it, and the business that it's produced by allowing people to develop apps which are used on the iPhone. So magnificent business.
I've brought up the graph of Alphabet. You did mention it, and there it shows you 1532 was the share price before the results came out, and it went down to 1457 when the results were published. Stabilizing a little bit during the day, and it seems to be improving now. But some very high volumes there as well, Dave, as you can see on this chart. Alphabet is an interesting one. We dropped that out of our Biznews global share portfolio some time ago. And the reason for that was the concern over antitrust issues. But it's not just Alphabet or Google that is now coming into the crosshairs for antitrust issues. There was some very interesting developments on Capitol Hill last week where the big four were all taken to task by politicians.
Well, I have to be a little cynical about this, because I was watching on Wednesday night, and Jay Powell was delivering his address that followed the FOMC, the Federal Reserve meeting, kept rates down, and he was very somber and looked very troubled about the U.S. economy, because the spate of the second wave of viruses was impacting on the recovery. It's going to take longer now. We'll do whatever we have. And then you switch to Congress, where the successful businesses of Apple, Amazon that we mentioned, which are doing absolutely brilliant, generating huge amounts of cash, creating jobs, plowing back money into research and development, are now being attacked by Congress because they're too powerful and too good. That's what you base it. You're too successful, we've got to bring you down. I'm saying, hold on a sec. This doesn't match. Give them a little break. They're generating money that you need, that economy needs. We're not we're generating tens of billions of dollars. Just give them a break for a bit. When you've got COVID under pressure, under control, then maybe start worrying about antitrust. But that's politicians. There's always a cause that they have to pursue. And it was.
I heard some lovely comments around that, how you had first-rate chief executives being attacked by second-rate politicians. It was like those politicians were trying to make a point to get elected or play to the gallery.
There was one point where it was a Republican, either a House member, I don't know who it was on, or certainly a Republican member from one of the southern states or western states, and he was attacking Mark Zuckerberg about something. And Zuckerberg said, that's Twitter, that's not us. In other words, whatever his line of questioning or anger was at Twitter, not at Facebook. And Zuckerberg just looked and said, no, that's Twitter, not us.
It's a very difficult story and quite complex. You've got to admire them for keeping their cool through all of this. Well, I suppose they're very, very well trained. Dave, on the South African market, is there any here that is now starting to catch your eye? We're getting quite a few views coming through that there are cheap equities in South Africa.
They keep, but I'm worried that they could get cheaper. And you gladly you got Kevin coming, Kevin Lings, who I admire and is great. He's someone, really, and he says things in an easy, understandable way. And I worry that it's going to take us a long time to get out of the mess that we're in. What's troubled me today, and I can't get the answer, is that the Rand, which was 16.40 a week ago, has suddenly spiked to 17.25 the last time I looked. Bank shares are coming under pressure. We had a good result from ShopRite. Very good result. The only thing to mention is that they're now moving out, like Mr. Price, moving out of Nigeria. Obviously, it's a difficult place to trade. But I mean, overall, I think we've got a lot of troubles to overcome before, things get really cheap. So for the meantime, I'm still sticking to the successful markets and where companies are growing at double digits, like the tech counters, and there are plenty more where that came from. China looking particularly interesting at the moment as well. So, Alec, you can wait. You don't have to get in now.
There's the Rand graph of the last 10 days, and as you can see, we were on July the 27th. That's beginning of last week, Tuesday last week. We were sitting at around 16.30 to the US dollar. And as you correctly said, there's been a spike. We're now 17.25. Those are very, very big moves. Presumably not a great amount of happiness over the IMF loan, which came out Friday night.
That might be the cause. It might have been a slightly delayed reaction, but there is something. And I'm going to defer to Kevin because look at commodity prices. Gold is rushing up. It's almost 2,000. It's steady today. Platinum has picked up. Iron ore remains steadfast above $100 a ton. Copper has been good. Coal price is reasonable. Oil has been under a bit of pressure now. So normally when the dollar comes under pressure and when commodity prices go up, the Rand benefits. And I think that got us down to the 16.30, 16.40 level. But suddenly within the last few days, and I think it was from Friday, we started to see the weakening begin. We've lost a lot of ground. So there's something there. Either money's flowing out for one reason, it might be associated with one particular order, but I haven't got on top of it. I'm not sure, why this has happened.
David, just to close off our little conversation for Rational Radio today, although you will be jumping in later to quiz some of the other guests, here's the share price in the United States, AngloGold. What a strange story that has happened there with executive. Just unpack it for us, because you can see the share price going down at a time that it's going up.
Well, look, admittedly, gold shares had run far ahead of the gold price, and the gold price is now playing catch-up. But I can't remember, Kevin Dushin, I can't pronounce his name, and I need it in front of me to pronounce, so forgive me for getting it wrong. But he joined AngloGold 2 years ago, having been with Barrick, which is a very successful American gold miner, and he took over and he's been running the place for 2 years, and it's done very well under his leadership. But he suddenly announced that he's retiring. He wants to spend time with his family and lockdown in Toronto, and that worried. I said, okay, that was strange. But the story coming out, and I don't know whether it's really been, whether it's official now, was that when he joined AngloGold, he'd been offered he was going to lose his Barrick bonus, and they offered to pay it. But what happened is apparently Barrick also paid the bonus. Now, he did give back one of them. I'm not sure which back, but I think it was the time taken before he actually acknowledged that he had received bonuses that I think upset the PRC, and the PRC called for his resignation. And I think we need to confirm the story and get substantiation over that. But there was, naturally the suddenness of his departure at a time where the gold miner is doing so well just points to something not right.
What a strange story. And you think that if you're in an executive office, you need to be, purer than his wife. You have to be so clean in this day and age when so much attention is being focused on the people at the top of corporations because of well, apparently excessive executive remuneration. Canadians, we don't have a great record with Canadians in South Africa. Do you? Cecil, great, not AngloGold. Maybe we should just leave them alone and look elsewhere.
Yeah. Go to Australia, where Kutafani comes from. Yeah.
Bring in a few more Aussies. Not a bad idea. Well, David, we've got Nick Hudson joining us now. Nick is the coordinator of PANDA. What do you know, before Nick speaks to us, what do you know about PANDA, Dave?
Only what I've learned on the show, which has been very revealing and interesting. So, I think last week was particular. I can't remember your gentleman's name as well, but very interesting how they put this organization together. And I'm particularly interested in Nick's analysis of COVID, especially now where we are supposedly the fifth largest infection rate in the world. So we'd love to hear where we are at the moment.
Well, it's always good talking with you, Nick. Thanks for joining us. As David is saying, he's learned a whole lot. I've learned as well from you guys. And when I read through your latest piece, which I think Jackie's in the process of putting it up onto Biznews right now, you've come up with an adjustment to your forecasts, but you've also reminded us that South Africa's lockdown was based on some very scary forecasts, and that the lockdown itself, according to the data that you have, hasn't worked anywhere in the world, and certainly hasn't worked here. Just unpack exactly why you can make a statement like that, because the president of the country is continuously patting himself on the back for the lockdown that was implemented on the 27th of March.
Yeah. Hello, Alec, and hello to your listeners. Wherever you look in the world, you see exactly the same pattern for this disease in terms of the type of curve that is presented in any epidemic in any country. And, the lockdown theory proposes that there will be dramatic effects on the rate at which the infections will spread in a country. And, it's a very strong prediction that there will be, step downs in the rate of infection. And when you release lockdown, there will be step ups. And we've gone through every single country in the world, and every single lockdown event and every single release of lockdown. You can't see these step downs and step ups. The curve just does what the curve will do. We've also done it on an inter-country basis. We've looked to see if there's any kind of correlation between the strength of a country's lockdown and the number of days it takes to get to its peak, or the number of people who ultimately succumb to the virus, and we find nothing. And this is not only research that we've done, this is being corroborated all over the world by other researchers like ourselves. So it's quite a strong finding. We long suspected that the curve flattening idea, the idea that you could push down the epidemic strongly enough to make a difference in terms of hospital capacity utilization, or to buy yourself a lot of time. We long suspected that was an overwrought one, but we were quite surprised when we started getting into the analysis to see that there's just really no sign that lockdowns have any effect at all.
Nick, on your screen now, you can see a graph there that I've actually pulled from Kevin Lings's report about weekly deaths from all causes. And as you can see, there's a very distinct increase in the deaths in South Africa. Now, if one has a look at the forecasts and projections that you're talking about, and what the South African Medical Research Council is saying, from their side, these excess deaths, as we call them, are a result of COVID-19. From your side, which I found very interesting, you don't believe that it's actually COVID-19 that is causing excess deaths, but the lockdown itself. Just take us through that argument.
Yeah, I think to be fair to the SAMRC, they did correct in the initial report. They did have the somewhat ambiguous wording where it said COVID-related deaths. Not being too specific about whether it was people contracting the disease or affected by things like unavailability of treatment for other diseases, or suspension of treatments for tuberculosis or HIV or things like that. So it is a slightly ambiguous wording, and we asked them to correct it, and they have subsequently done so. So the jury's out, I guess, is what it would be fair to say, as to whether any of these deaths that are not recorded as coronavirus deaths are in fact from coronavirus or from the consequences of lockdown. We've also asked them to provide age-based breakdowns so that we can see, because if there's suddenly children dying or 25-year-olds dying, then you know for sure that those are not coronavirus deaths, and that we're actually starting to grapple with lockdown deaths. But I don't even think that getting that information is going to be required, because the Western Cape is now already more than a third off its peak. It peaked more than a month ago, probably, what are we talking about, 5, almost 6 weeks ago. And as its epidemic continues to decline, if those excess deaths stay there, then they are most definitely not coronavirus deaths, and they are our first lockdown deaths. And you'll remember the whole PANDA journey started with us saying, well, hold on a minute, people, what we're forgetting here is it's not a trade-off between lives and money. That's a silly way of looking at it. Money mediates life. It's just a transaction in the middle between the work you do and the food that you eat. And we are in the main thing wrong with these models is not the number of deaths they're predicting from coronavirus, which we thought was wrong anyway, but that they don't take into account the number of deaths, loss of life that will result from plunging the economy into a multi-year depression. Especially in a developing nation like our own, where so many people don't have big reservoirs of savings and where we don't have a big welfare safety net,
Just
so
explain
it's
that.
all very sad.
Yeah, a lot of people explain that, because a lot of people look at that graph and say, well, there it is. That's evidence that COVID-19 is being underreported, as often happens in third world, but there are more people dying than there were in the past. So there is more of more to this COVID-19 story than what we've been told. However, on your side, you're saying that a lockdown actually causes deaths. Now, I've read your report, so I know your argument, but just explain that to those who haven't read it yet.
So it's long been understood that there's a strong relationship between your morbidity and mortality and your level of income. And that's visible at many levels. So, wealthier nations have longer life expectancies. Pretty much everybody knows that. But even within nations, if you're an insurance company and you're trying to price a life insurance product, for many decades, probably even for more than 100 years, the actuaries at insurance companies have observed that people in different income categories have different mortality rates. And the idea is if you drop a couple of notches in your income, and that's what's happening here. People are going, we saw today that formal sector salaries have fallen by 20% across the board. These are very meaningful impacts on a society. And what comes with that level of destitution and worsening nutrition and stress and all those things is a higher mortality rate. So that's how this manifests. We weren't specific in that first report about the precise mechanisms, but other researchers have been quite recently. Shabir Madhi and Glenda Gray, and more recently Prof. Slim put out papers just warning. Look at look at what's going on in TB. Look at what's going on in HIV. It doesn't take much in terms of a drop off in treatment rates and so on to lead to a quick deterioration in those cases that they're managing. But all I would say, yes, I know there are people out there who want to be able to say, look, we weren't panicking for nothing, and they will go as hard as they can and fight as hard as they can to argue that those excess deaths are all coronavirus related and it has nothing to do with lockdown. We think they're naive. We think that in a couple of weeks it'll become clear. And as I say, the province to watch is the Western Cape, because within weeks from now, the coronavirus curve will have dropped off to negligible levels. And if those excess deaths are hanging around, then you've got your answer.
You refer in your piece as well to Michael Levitt, Professor Michael Levitt from Stanford, a South African. South Africa's, we often say this, South Africa's living science Nobel Prize winner, who really has shaken up the world in presenting alternative theories to the status quo, and is getting quite a lot of recognition for it now. But he refers to something called the Gompertz curve.
Yes.
Tell us about this Gompertz curve. I had a look through it, and I wasn't quite sure exactly what you guys were getting at.
Yeah, the Gompertz curve is a statistical. It's a family of statistical distributions that he observed fit the epidemic distributions extremely well, and we went and verified this. I mean, we ran this curve against, I think it was upwards of 150 countries, and it fits like a glove, you know. And what we'd observed before that is that these compartment models, the SEIR models, produce curves that you don't see anywhere in the world. You know, the models that of the nature that the NICD has been using in the IMHE and so on, Imperial College. The curves that they produce you can't see anywhere. They're just textbook or, you know, figment of the imagination curves. They don't actually exist in the real world. And you know, his fits are uncanny. They're not just fits. They're really hand in glove fits. And so as soon as he pointed this out, we just started using them, you know, and we've never had any cause to do anything else. We were trying to stay out of the modeling game, you know. We felt there were enough people in it, and we were trying to make the high level points, like just acknowledge people that there's a trade-off between you know, managing the disease and managing life for the rest of your citizens. We try to point out that, you know, the narrative that everybody was at risk to this horrible virus was simply not the case, that it affected a small proportion of every population, and, you know, predominantly old and very sick people. We try to point out that the lockdown impacts in terms of the costs, the negatives, were going to be much strongly felt, more strongly felt in developing countries than in developed ones. You know, so that we try to keep our narrative in that space. But as the gap between these models and the real world started growing, and we started getting phone calls from doctors and hospital administrators saying, listen, I've got this model, it doesn't make any sense, it's not what we're seeing, can you guys give us some guidance? We started putting out these Gompertz curves, and the one we put out for the Western Cape on the same day that the NICD published their model was uncannily accurate. I mean, we weren't expecting it to be that good. You know, we put it out on the same day, and we haven't touched it since, and it's tracking in a much narrower confidence interval than the NICD provided, and it predicted the peak correctly, and it predicted the decline correctly. It's all just tracking in a very narrow range, and that's the Western Cape for you. So what we decided to do on the weekend now is just to try and manage our own time, because we're a small organization. You can't deal with all this inbound communication. We just miss half of it. You know, our inboxes are just like totally overflowing. So what we decided to do was put out curves for the other provinces that we've modeled so far, which are the major provinces. You know, the experience in Mpumalanga and Limpopo and Northern Province and so on is just too, and Northwest is just too small and too light for us to do anything with at the moment. But so we put out Gauteng, KwaZulu-Natal, Eastern Cape and Western Cape. And, you know, just in an effort to sort of try and give people some guidance as to what's actually happening out there. You know, so the Eastern Cape's past its peak. South Africa, we think, is probably also past its peak, although we'll need a few days to confirm that. Gauteng is close. It's not the October peak that the NICD is predicting.
So what you've done is gone into the modeling game yourself.
Yeah, but through the back door. You know, applying somebody else's method. You know.
Okay. All right.
I can't help it. We've tried really hard. What can you do? I mean, what else do you want us to do? Just let these people say, no, sorry, we can't help you, you know? And we will update those curves as we go. But I think they'll be reasonable, you know?
You were criticized roundly of just throwing bricks, or just criticizing, not offering a solution. Now you are showing your own models, and they do appear to be somewhat different to everybody else's. To what degree, though? How confident are you that administrators in hospitals in provinces that are now preparing themselves for the pandemic or for the wave that is going to hit them, that they can use your models and not find themselves short of ICU beds?
Yeah, I think we're pretty confident that the broad trajectories are well described by those models. I mean, it would be an enormous departure for South Africa to do something that no other country in the world has done. And this is the nature of the point that we've been making all the way along. We wouldn't put those models out if we had some doubt that they would be materially wrong, Alec. It would just be grossly irresponsible. But I just want to pick up on your earlier point, you know, this idea that we throw bricks. I mean, it's simply not the case. I mean, from the very beginning, we've been recommending alternative policy ideas. You know, in the first place, we pointed out, look, this disease only poses a significant risk to a small portion of the population who are not economically productive. So you should be addressing your resources towards them and letting the rest of us get along with our lives and producing getting involved in the production that provides the state and private individuals with the capacity to respond to things like a viral threat. We've suggested techniques of dealing with old age homes and reducing the burden there to try and avoid that situation that existed in the tri-state area in the US, where you just have this, and in Canada as well, where you just have this terrible rushing through of the virus through nursing homes and so on. You know, we've recommended that it was a good idea to, instead of you know, spreading the resources so broadly, we suggested you know, take some of that 500 billion and increase the state old age pension for a few months so that older people who are poorer can find the means to isolate themselves. We've had a number of policy suggestions along the way. You know, we throw bricks at lockdown, make no mistake. We throw bricks at those models because they've caused a panic. And we also, the other thing we really criticize is this fear mongering, you know, which the models are implicated in. You diminish people's agency and their ability to get on in the world when you drive them into these positions of intense fear, irrational fear, you know. And it's still around us. I mean, I've got, you know, friends who won't let their children outdoors after school and that kind of thing. It's just, you know, really, there's no relationship to the real risk involved. Yeah.
The impact on small business of the lockdown and what's happened, yeah. Are you able to quantify it in any way?
Yeah, I don't have all the recent statistics at my fingertips, Alec, but my understanding is that, you know, close to 100,000 businesses have shut their doors, and the work, you know, I'm not that close to the work, but we do a lot of investigation into industry by industry and by size category of business, and what the guys are telling me is that the big wave of business impacts is going to come this month in August, and then to a greater extent even next month. That pretty much the owners and entrepreneurs have tried, you know, pulled every lever that they could to keep their businesses afloat, and now they run out of options, and those business failures are going to come thick and fast over the next 2 months. So, you know, and with the epidemic in decline, this continuation of lockdown, the booze ban, all of these things, they just make no sense whatsoever, and they should be terminated immediately. It's a joke now. The government cannot possibly be maintaining that it has the interests of its citizens at heart if it is continuing with these lockdowns. They are going to cause death on a far greater scale than the virus.
David Shapiro, before we let Nick go, do you have any thoughts or any questions you'd like to pose?
I think the big question, first of all, is Nick saying that this virus just burns itself out eventually? Is it just, you know, fundamentally burns its way out of the system? If you say you know, when you're talking about your curves.
So, Dave, it's an excellent question, and people do use the term, but it's not so much a case of the virus burning itself out. It's just that, you know, there's a big portion of the population who are simply not susceptible to a severe disease course. You know, there's been a lot of confusion around this concept of herd immunity, you know, only being attained when 60 or 70% of the population are showing that they've got antibodies. And it's a very textbook kind of version of the world. But now in paper after paper, it's become clear that what we thought was the case is in fact the case, and that is that, you know, anywhere between 50 and 80% of the population are able to fight the disease off using the first layer of the immune defense system, which is called your cellular immune system, or your T cells. And if you fight a disease off, a virus off with your cellular immune system, you may go on not to produce antibodies, and then you will never test positive on a seroprevalence test. So You know, the majority of the population just shrug it off, and they never even know that they had the virus in their cells. Their bodies just deal with it. So it's not so much about. I like to replace the word immunity with resistance, because people understand it a bit more easily. You know, if you say like Dave Shapiro, he's resistant to the virus because he's got strong T cells. You know. Yeah, so what's happening there is your body is recognizing something is foreign, and it's similar to something that you had maybe as a kid, or in recent years you had another type of coronavirus that gave you a cold, and so your T cells are on the lookout for the proteins that are involved in this coronavirus, you know, and that's called cross reactivity. It's one type of T cell immunity. And so it's not like you're immune in strict terms to this specific beta coronavirus, but you're resistant.
Nick, I've got a few questions before we let you go. Charles Wells wants to know, how do you explain the New York lockdown, which surely helped to stop the rapid spread, versus the USA today? Virus is like a wildfire.
No, there's absolutely no sign that it helped at all. Yes, you know, I don't want to get too deep into the technical weeds, but you look at the rate of change of the daily deaths, and that rate of change just follows this linear decline, and the inception of lockdown does absolutely nothing, you know. And you remember, you've got to look at a lag thing. You can't say that lockdown was on day 0 and the effect was on day 0. People just stop dying immediately, because the idea is that it's not that it prevents, that it stops death, it's that it stops infections, right? And those infections take 20 or 30 days to wash through the system. So you've got to look at a time 20 or 30 days after the lockdown is implemented, and then you look for a change, a step function in what's called the reproduction rate, or the rate at which daily deaths are increasing or decreasing. And that natural shape that this disease follows, you know, as what David referred to as the burnout, the natural shape that the epidemic curves follows is just completely unaffected by lockdown inception or what do you call it, relaxation. And I want to remind people, you know, this is where I get a bit cross with these epis, is they make predictions, and then when the predictions don't come true, they don't change their theories. Okay, so everybody was all of the epis, whole team was shouting and shouting at Denmark and Germany, don't end your lockdown, you're going to have this wall of death, you know, it'll be there in 2 weeks, okay. But what actually happens? They relax their lockdowns, and 2 months later, or however long it's been, I think even longer, nothing. There isn't even a jot. You know, they predict catastrophe in Sweden because it hasn't done a lockdown, and there is no catastrophe in Sweden. It's excess mortality there is, you know, below the average for Western Europe, and it's you know, pretty much in line with other slightly bad flu seasons. So, you know, they keep making these outrageous kind of panic-stricken predictions. Predictions don't come true, and they don't change the theory. And then people shout at us for like denying the lockdown theory, which is after all a novel theory. It hasn't been tried before, right? We don't know. There's no experience of having done lockdowns and found that they are successful in dealing with viral epidemics. You know,
we do know though that they hurt the economy a lot. Derek Christian wants to know. He says, surely a drop in income levels takes months, if not years, to have an effect on overall mortality rates.
I think that would be true for high-income people, and definitely, by the way, we never expect like the whole impact to come up front. But I just keep on reminding people. I mean, we work with a number of NGOs. Yeah, the level of stress and strain that comes with being taken from a low middle income job. You've got an income, you've got a family, you've got the extended family in South Africa. It's a pronounced effect. You know, what people sometimes refer to as black tax. You know, where you if you're the person with an income, you've got unemployed extended family who rely upon you, and that's all real stuff. Now you lose your job, okay, and immediately everything just comes apart. There's no social safety network. There's no savings that have been built up, and life comes apart, and it's terrible. I mean, you know, I think for listeners on your show, a lot of them will maybe have to think about it in terms of like, you know, if they see other parents at the school whose businesses have gone under, and those parents are now contemplating trying to sell a house, you know, what the trade-offs? Do they keep the kids in school? Do they pull them out of school? What are they going to do? You know, and you see the stress on those people's faces. Now multiply that by, I don't know, whatever multiple you choose, and you're living in lower middle income zone. This is profound stuff, and it's biting, and it comes, and it doesn't take long. You know, if your protein content in your diet drops, you get pretty quick health impacts. You know, because that's what we're talking about. I mean, people in that income level already struggle to keep reasonable balance in their diets. So you take their incomes away, and now the diet goes to hell in a handbasket. That kind of stuff starts affecting you. And this, you know, you talk about 45-year-old bankers and doctors telling them, listen, take it easy, you're going to have a heart attack. That's for real. Okay, take that stress, multiply it by a factor. That's what you're dealing with in South Africa's townships right now.
Nick Hudson, thanks very much again for expressing your opinion, as you always do, rather forcefully. Much appreciated. We're going to be picking up on the economic issue now with Kevin Lings. I see Kevin is with us. Kevin, if you could open your microphone and your camera. There we go. Nice to see you, Kevin.
Hi, Alec. How are you doing?
Yeah, man, very good to see you, Kevin. And Nick, thanks again for your contribution today. It's always such a pleasure. Kevin, yes. I love the work you do, and I think I make no bones about that. But particularly the work you did now recently on the IMF, or the loan that South Africa has made to the International Monetary Fund. There are 3 points of view. And without unpacking all the details, perhaps you could tell us which of these 3 points of view actually make sense. The one is to say that the South Africa should never have borrowed the money because it's just going to get stolen. The second one is to say South Africa should never have borrowed the money because it's not going to honor the commitments because they're just too onerous from a political perspective. And the third point is South Africa was very opportunistic in borrowing the money because at a 1% interest rate and only having to start repaying it in 2023, it's a good deal for anybody. So help us through that so that we can understand this in proper sense.
Sure, thanks, Alec. Look, I think the argument that South Africa should never borrow the money because it'll get stolen anyway, you can apply that to any facility, no matter where it comes from. The fact that it's from the IMF doesn't make it more or less vulnerable to some form of exploitation or corruption or something. So I don't think that that's a factor. Where I think there's a legitimate discussion is, should South Africa have approached the IMF in the first place? Or should we have tried to merely keep all of that borrowing domestically? And I suppose from the government's point of view, you end up with a dilemma. And the dilemma, I think, is fairly simple. And that is that you're running into a major problem with regards to your ability to fund yourself domestically. So let me put that in context. At the moment, the government is borrowing the equivalent of 1 billion rand every single day in South Africa. And I'm including Saturdays and Sundays in that calculation. Now, obviously, the government doesn't actually borrow on Saturdays and Sundays. It issues tranches of debt during the course of the week, every week. But it amounts to more than 1 billion rand every single day. And it's got to keep doing that every single day for the remainder of this year in order to stand a chance of adequately funding themselves. That's what we are up against. Now, if you say to that government, you're borrowing 1 billion every day, and on top of that, I want you to borrow an additional 70 billion, however you do that, would the government be pleased with that? And obviously the response would be, well, you're now pushing us into dangerous territory, because the danger here is that as the government tries to borrow more and more and more, at some point, the market doesn't want to give them the money. Nobody wants to give them the money. That the people who domestically are providing the government with this finance, which are essentially pension funds, unit trusts, the savers of South Africa, that the government tries to raise the money domestically and there's no money. At that point, you would have a failed auction, and the risk with a failed auction is that you're massively closer to a debt default. So the government has to make a decision, and that decision says, we already putting the domestic market under significant pressure. Yes, we could try and borrow that 70 billion. Instead of going to the IMF, we could try and borrow it domestically, but there's a risk. There's an increasing risk that at some point it's just too much. So they look around and they see that the IMF has got this facility that they're making more readily available, and that over 100 countries have applied for this facility. And this facility comes with generous terms. And so they look at that and they think, well, here's a way to diversify my borrowing. I don't have to borrow everything domestically. They're very well aware that there's a risk with this. And the risk is that you're borrowing in dollars, and so you've got to repay in dollars. And as the currency weakens, it's going to increase effectively the cost of that. So they may have looked at it and thought, well, the currency is already a lot weaker than it ought to be, so maybe that risk isn't that profound. The interest rate is 1.1%. We get a holiday for the next 3 years in terms of repaying it. There's very little conditionality attached to it. Why not? And it's a legitimate view. Why not? South Africa has relatively low foreign debt. That doesn't mean you want to now go purposely increase the foreign debt, because when we look around the world, the countries that have got themselves into real trouble are the countries with a lot of foreign debt. So you don't want to just because you've got little foreign debt, you don't want to just add. So I guess it's a balance of factors. I think it wasn't a bad move. I think that there are a couple of reasons why. One is it forces the government to articulate the problem. They've got to discuss the problem with the IMF. They have to have meetings and discuss how this is going. They've got to articulate it in form of a letter and an undertaking. And I think that articulation is very useful because it does allow for quantifying the problem more acutely. You can't just ramble on about the problem. You've got to condense it. And I think that's useful. The second thing is you've also got to come face to face with what it's going to take for you to fix the problem. And once you put that on paper and now it's available in public, it's very clear what you're up against. So I think that process of writing a letter of intent or undertaking helps to clarify the problem. And it helps to clarify the problem for a lot of people as opposed to political mumbo jumbo around the problem. And I think people would be advised to read that letter because it does just that. It clarifies what the problem is. The third thing it does is it does tend to encourage foreigners. When foreigners see that a country's approached the IMF, they already know the country's in difficulty, but by approaching the IMF, there's a tendency to think the foreigner will now try and put their house in order. That may be a false belief. That may turn out to not be valid, right? I'll come to that in a sec. So to me, it does a number of things. The amount 70 billion within the context of South Africa is small. It does give us a higher level of responsibility with regards to doing the right thing. And perhaps that's not a bad thing within the context of South Africa, that there is this entity outside of South Africa that's keeping a closer eye on how the country's being managed. So on balance, I would say it's not a bad process. I think it's gone reasonably okay, although we did delay the letter. The drafting of the letter took a huge amount of time. So you can see the anguish within the government of even just that, of approaching the IMF. But I think it's helpful. I think it allowed for them to articulate this. Now, the risk here is that the government, having written this letter of intent, simply has no real intention to follow this letter. And that's a valid risk, right? But I would just add two things. One is that when you look at that letter of intent, it mimics the supplementary budget. So the budget that the minister presented on the 24th of June essentially is the same as the letter. The ideas, the way forward, the constraints, the remedies, the solutions, all of that is pretty much the supplementary budget. So if we say that the government's not going to adhere to this letter of intent, then you're saying the government's not going to adhere to the supplementary budget, which is clearly a risk. But what you're then saying is that the government has no intention of trying to fix this country and put it on a better path, irrespective of the IMF facility. And that also may prove to be true, but then what you're doing is you're putting the reputation of the Minister of Finance and the cabinet We had a discussion with the Minister of Finance after the supplementary budget, and he made it clear to us that he had had a meeting with the Cabinet to discuss the supplementary budget before presenting the budget. And the Cabinet fully endorsed the supplementary budget, including the President. So now you've got a letter of intent and a supplementary budget that say the same thing, fully endorsed by the Cabinet and the President, and you're saying this is the way we're going to go forward. Of course, if that's not the way we're going to go forward, you lose credibility in every respect. And that's the risk. It's not related just to the IMF. It's related to how we manage this country going forward and whether this government and the Cabinet have the political will to implement the changes that they articulated.
The question that I think, and Dave, I'd love you to come in as well, that we'd love answered, and there are really two parts to it. The first part is the rand, which blew out this morning after the IMF loan on Friday. Why? And the second part to all of this is we saw the Sunday Times over the weekend, and they're pretty close to what's happening inside. And you've got this incredible now with the ANC internally. And if that goes the wrong way, if you like, surely we've now blown our chances like Zimbabwe has, because Zimbabwe cannot lend from the IMF, borrow from the IMF anymore, because it's blotted its copybook. They're not prepared to lend to Zimbabwe. If South Africa is to get the kind of governance, if there were to be a change in the Cabinet or a change in the balance of power, by taking this IMF loan and then not honoring the commitments, would seem to be a huge risk. David, I don't know if you want to add to that.
No, I think the question that I've asked is pretty similar. You know, it's horrific that we're raising 1 billion a day. Yes, we've got this other amount that we owe now, which is now, I worked out, we don't owe them, we're not going to pay them 17 billion back, we now owe them 74 billion in 1 week. And no one knows where this is going to go. I know it's a small amount, but it just shows you how things can turn around. Kevin, you know, the big worry is that government hasn't shown the resilience in the past. We haven't shown the commitment in the past. Why do you think it's going to change? You know, in other words, you know, it sounds all very easy to sit around cabinet and to decide these factors, but our past record is so bad in every respect. You know, what's going to change, or what do you think is going to change it? I'm going to go.
Okay. Yeah, so there's quite a bit in that. So first, David, I'm not saying that by signing this facility that things are going to change. All I'm saying is that the government has made a clear commitment to the change. That doesn't mean things change. This government has made clear commitments to a lot of things in the past, and to be honest, very little has changed. So there's nothing by simply writing a letter of intent, signing a document, doing a supplementary speech. By doing all of that, that doesn't imply that things are going to change. They just reflect your intention. Now, my view is that at this stage, we're on the path. If you take the current fiscal direction that South Africa's on, we're on the path to a financial crisis which would see South Africa default. That's the current path that we're on. And this effort to now issue the supplementary budget, do the IMF facility, all of that, that's an effort by government to change the path. And I recognize that and I appreciate it. But have I got evidence that the path is being changed? No. Can I point to any single thing that has actually changed besides a speech or a signed document? No. So I can't stand here and say it will change because we've signed this letter of intent. I've got to see the evidence of that change. And as I see evidence of that change, then I'd become much more optimistic that we could potentially be on a better path. But at this stage, you have to be clear that the path we're on is a path towards an outright financial crisis. And that path that we were on was whether we took the IMF facility or not. We still had to borrow the money. Where we borrow the money from doesn't change the path. We still needed all of that money. We've chosen just to use a bit from the IMF. It's very, and I agree with you, Alec, it's very clear though, that if you write this letter of intent and then you don't honor it or show any real purpose in trying to honor it, then when you go back to the IMF and you ask for facilities, you're going to struggle to get the same sort of facility or conditionality that is acceptable. The IMF will do business with you, but the condition will go up substantially because they've seen you not show or not follow through the intent. So it's a dangerous game to play if you're not going to act in good faith. The IMF doesn't take that very lightly. And you mentioned Zimbabwe. Zimbabwe has gone way beyond that. So you don't want to sign this letter of intent with no good intention. So is it that this will definitely start to change for the positive? My view is you can't make that conclusion. You would have to wait for the October medium-term budget, see if government's willing to implement these changes, wait for the February budget, see if government's willing to implement. And by then you'll know, because we're talking about zero-based budgeting, we're talking about containing the salary cost, we're talking about making government expenditure way more effective, we're talking about a harder line towards state-owned enterprises. There's a whole range of things that you're going to quickly judge whether government is serious with this intention. And if they now go down this route and it becomes very clear that there isn't a seriousness about this intent, then credibility is going to evaporate, the currency will be under further pressure, and then we're setting ourselves up for default, which means at that point, sorry.
No, I just wanted to ask you the final point. Sorry, but I interrupted at the wrong. We're setting ourselves up for default, and?
So at that point, let's say we get to a default. Every single country that is defaulted does so from a point of negligence. In other words, let me put it in the South African context. If we got to the point where we were about to default on government debt, we would always have the option to go to the IMF, because we're a paid up member of the IMF, and ask them for a facility. And if we're willing to take the conditionality that the IMF sets out, then we can avoid the default. So if we default, it's telling you that we are putting politics ahead of economics. We are unwilling to take the conditionality from the IMF in order to avoid an economic catastrophe. So in South Africa's case, we are a full standing member. We've paid all our fees. We're entitled to approach them. The IMF undoubtedly will give us the facility if we're willing to accept that conditionality. So default is our risk, not anybody else. It's within our control.
Just that final point, because we still have the whole listeriosis story to be talking about in a moment with Alec Spoor. We see on the graph, on the screen rather, what the Rand has done in the last few days.
Yeah.
And really blown out. What is this telling us?
So when we're looking at the Rand, firstly, it's not an emerging market story. This is sometimes the Rand weakens together with other emerging market currencies, and then you realize, well, you know, it's foreigners turning their back on emerging markets in the short term. That's not what's happening here. Some emerging market currencies have weakened, but it's not enough to say this is an emerging market trend. This is South African specific. So there are two possibilities, and quite frankly, you don't know. The one is that we're picking up some disappointment that the IMF facility and the intention did not go a lot further. That many foreigners were hoping that this would require South Africa to agree to much more stringent changes in how we're about to manage South Africa, and that because that wasn't evident, this was a broad letter of intent and the specifics were not included, that ultimately has been disappointing, and that it still allows for the government to mismanage the economy. And that's true, right? The government it's a good faith transaction. We get the money up front, even though we have not adhered to any letter of content. And if we don't adhere to this letter of content, the IMF can't take the money back. They can't phone us up and say, pay us all back. We can simply say, well, we're going to honor the agreement. So the money flows, and once the money flows, there's nothing the IMF can do. And the sense is that some foreigners may have been unhappy that that was as far as the IMF went. But to be fair, that's what the IMF has done with all the other countries. There's something like 80 countries that have been helped during this time. That's what the IMF has done to most of those, and therefore it would be unfair to expect extra strong conditions with regards to South Africa. The other thing is that there may be an underlying transaction going through the markets that caused the Rand to weaken in terms of, say, a large dividend payment, something like that, which right now we're not aware of. So we must be aware that we might find out the reason for the currency weakness only with hindsight. And so I'm reluctant to attribute this directly to the IMF and disappointment around the content of the agreement, because something else may materialize. But I think that David's right in highlighting the risk. Already the repayment is under pressure, and clearly if we don't start to manage this country better, all of these foreign debts are going to become a lot more onerous, and quite frankly everything is going to. South Africa is very import intensive. As soon as we try to get this economy going, as soon as we try and create technology investment, etc., it's going to cost us a fortune. So the path we're on is not sustainable.
Kevin, thanks for that extremely rational perspective on where we are in the country at the moment, and with the IMF's loan, which of course has had many people asking all kinds of different questions, and thanks for putting it into perspective so well for us.
Sure.
We close off the show today with Alex Spoor. Alex is a lawyer. He's also very intimately involved with perhaps the biggest corporate scandal outside of Steinhoff. And I guess it depends on where you sit, Alex, but certainly you guys are representing, and you can tell us how many people against Tiger Brands, which produced contaminated polony. We all know the story. They were told by the Department of Health that there was something going wrong. They didn't listen. They continued to allow people to eat, and many people died as a consequence of this. So I think your father, Richard, I presume it's your father or your brother, Richard Spoor, is very well known as a class action attorney here in South Africa, and doing a lot for people who otherwise wouldn't have a voice. When did you guys get involved in the whole listeriosis saga, and what's an update? It's gone very quiet from where the rest of us are sitting.
Yes, thanks, Alec. It certainly is a scandal of Steinhoff proportions, and the implications in South Africa have been extraordinary. Just to move from the conversation of the coronavirus into listeriosis, just for a little bit of background for the listeners. Bacteria, this is a bacterial infection as opposed to a virus. It arises, listeria is found commonly in the environment, is commonly innocuous, but there's a strain called Listeria monocytogenes, one of the strains which is virulent and causes death and is deadly to humans. The listeriosis outbreak led to, we have approximately about 1,000 confirmed cases of listeriosis, so it's probably a vast underreporting. The death toll is estimated, the official death toll is at about 200, more than 200 persons. But if you take into account the effect on mothers and miscarriages, we're talking about 200 to 400, closer to 400 deaths, and the deaths of around 300 children. Essentially here where we are in the case is we got involved in this case from about 2017. In March of 2018, we launched a class action certification along with LHL attorneys. And we launched a very broad application for persons who were directly harmed through the listeria, mothers and children who had been harmed in the womb particularly, and for persons who lost loved ones. The litigation as it stands now, we've been certified by the court, and we are now preparing and trying to move this matter forward to trial. Our goal here is to get the matter before the court and demonstrate to the court that Tiger Brands is liable, that they caused this outbreak. What's important about that is that the evidence in this case is overwhelming. We have peer-reviewed journal articles, particularly one of the best-known peer-reviewed internationally recognized journals is the New England Journal of Medicine. And in many ways, this forms the basis of our claim for liability, where they have essentially found that there was a single plant, a Polokwane factory, and from this factory, we had tainted polony produced, not for a period of days or weeks, but we are talking about a period in which Tiger Brands produced and manufactured tainted polony, poison polony, for a period in excess of a year. It's a case about the absolute failure of its internal food, health, and safety systems that led to catastrophic consequences. At the moment, our primary goal is to move the matter to trial as quickly as possible. But with litigation like this, there are numerous obstacles. And while the class attorneys wish to push the matter as speedily to resolution as possible, numerous obstacles have come in the way. One of the most pressing issues at the moment is what we call for trial preparation is discovery. That is where Tiger Brands must share with us the information, the testing that they have. We must share the documentation with them. You can only move the matter to trial if you have this evidence. And currently, we have now been sitting since the certification from about March of 2018. That's when the NICD ruled that Tiger Brands was the source of this outbreak. Since then, we are still in a fight with Tiger Brands for them to provide us their internal documentation so we can move the matter to trial.
Alex, that's well, it's more than 2 years. We hear a lot about the politicians and particularly Jacob Zuma with his Stalingrad strategy. Is that a repeat here where the corporate is just not wanting to go to court, perhaps to wait you out?
Alex, it is unfortunately, it's the oldest litigation trick in the book. Delay, delay, delay. It is expensive to run litigation like this. A well-resourced opponent like Tiger Brands is very aware of that. They're also aware of the position of our clients. Polony is manufactured and sold and marketed to low-income households, primarily Black households. We know that the loss of a breadwinner can be absolutely devastating. We're now going through Corona, job losses. We have clients who are in absolutely desperate situations. If we just focus on those vulnerable groups, one of the most vulnerable groups was, as I was saying earlier, pregnant women. And we have a number of families where we have serious birth defects and the costs associated there and the suffering associated there. The long and short, though, Alex, is yes, we believe that Tiger is essentially delaying the matter and that they are well aware that the longer the matter continues, the more desperate persons are to reach settlement. And whereas we are in a strengthened position when the court finally rules and says, look, Tiger Brands is liable. If Tiger is aware that they can string this along for another 2 years, it's a strategy to force one to the table and say, well, my client is desperate now. What resolution can be reached? Our general attitude to that is to avoid delay and push them to the court as quickly as possible. One way to do that, this is a judicially managed matter. We are currently now making application to the court to compel Tiger to make discovery, to come on affidavit and say why it has taken them more than 2 years to provide us documentation. And maybe just the last thing to add to that, Alex, in terms of documentation, this is a regulated industry. There are strict regulations with food, health, and safety. It's a process of constant monitoring, constant checking. At least that is what the legislation requires. It also requires you to have that documentation readily available. However, Tiger looks to us and says, this is a very complex process. We cannot provide it to you, and the reasons are frankly scant.
David Shapiro, it doesn't sound good to me. I've got on the screen the Tiger share price, which hasn't really done that much. Presumably shareholders are looking at this and saying, well, they're fighting the right fight, but reputationally, this is terrific. Everybody knows what happened in this case, and as long as it lags in there, I think Tiger lost an executive over this already. As long as it lags there, the company is surely being harmed.
Well, as long as it becomes a legitimate case, then they have to provide some kind of contingency against losing the case. They might not feel that it's in their interest, but if it does go against them, then of course it's going to hurt the bottom line. But Alec, you're talking about reputational damage. I mean, they couldn't move away from what's happening. And I'm not a Tiger shareholder, but I watch the case from outside, and we watch these kind of governance cases very well, and especially big businesses. This is a business that's been around for over 100 years plus, with a very high reputation, and this can damage it. If you don't handle it properly, if you don't handle it correctly, particularly where it hurts, lower income groups, it is going to plague you, and it's going to plague the culture for a long time. So I don't know. What Alex has exposed today is seems to be a very strong case, or when I say strong case, it does show negligence on the part of Tigers. But I'd love to hear the response to this. We'd love to hear what they have to say. But delaying is something that's going to cost them even more down the line. By delaying actually bringing it to a head.
Well, you'd have thought that. I'm just looking at the share price. In 5 years, the share price has gone from $270 rands rather, went to 425 before listeriosis hit them, and now it's sitting at under 200 rand, 175 rand. If you are a shareholder in this company, surely to goodness, you just want to get the thing settled, or the whole world knows what happened. There's no mystery in this. All that the mystery is how much you pay. And surely that must be a priority now, or do these corporates not really calculate the reputational damage?
Maybe just two points to speak to the share price and the strength of the claim. Maybe to start with the strength of the claim. As I say, we've got the New England Journal of Medicine, a peer-reviewed, internationally recognized journal. And what is their finding? That polony produced at a single factory was the outbreak. How are they able to do that? Well, working with the NICD, they sequenced from these about 1,000 cases. They genetically sequenced about 600. Now, there is various forms of genetic testing. You can go before the criminal court and do genetic blood tests. You also get forms of proof in the form of fingerprints. In this case, we did a very specific form of genetic sequencing where you match the genome and actually take it down to the allele level. And you start looking at individual alleles to map this. And we find of these 600 samples is that 95% of them are genetically identical. It is the proof beyond a reasonable doubt. But in South Africa, as in any judicial system, that scientific knowledge must be put before the court, and the court must make a ruling and accept that. That's what we desperately want to do. We want to get it before the court as soon as possible, and that's what Tiger is preventing. Now, just to give the full picture here, because a shareholder in Tiger, a responsible corporate citizen, one would expect them to do the right thing. We can quantify these damages. There's various ways in which that can be done. Processes can be speeded up. Interim relief could be provided. In this case, what is also important to note is that Tiger has insurance. Tiger is insured against these sort of events. And in this case, the principle of subrogation, the insurer is said to step into the shoes of Tiger. And here we know who the insurers are. It's Admiral and QBE Insurance Group, who are 100% owned by Santam, who in turn is insured by Sanlam. So, you know, Tiger puts up their hands in some way and says, this is in the hands of the shareholder. Of course, there's a relationship there. But we also have Sanlam, who is sitting at the back here. And it appears very clearly to us that at the end of the day, Sanlam is intent on protecting that bottom line at all costs, despite the overwhelming evidence to the contrary that they are liable, that Tiger is guilty.
Alex Spoor from Spoor Incorporated. Thanks very much for bringing us up to date with that. David Shapiro, before we close off the show, because we've actually gone a little beyond our usual time, Peter Green said it requires a consumer boycott. Well, I'm not so sure that he would find much resistance from all of the people that have been listening to this program. Perhaps you and I would feel a little more strongly as well on a similar thing. But what I can't understand is big corporates not getting what reputational damages is causing. And as Alex was saying a moment ago, who's in the middle of this again? Santam. Santam went for how many weeks? 6 or 7 weeks of negative publicity before it finally did something to try and help small businesses on the business interruption insurance. And here it is again in the middle of an unwinnable case. You produce baloney, people die as a result of the baloney, hundreds of people die, but you just trying to keep it in touch for financial reasons.
Yeah. Straight. Remember what Ian Cantor said? He says insurance is voluntary, you know. So it's up to the insurance company whether they pay or not. But Alec, I think that we're going into the ESG era now, where companies can't behave like they did in the past. They have to be accountable to society, to their shareholders, to all stakeholders. And I think I would love to hear Tiger's response. I think it's important that we hear how they're responding to it. And also it's up to shareholders to express concerns as well. And they're big institutional shareholders around there. So I would love to hear the second part of the story. Not that I'm questioning Alex, it's nice to hear how they respond.
Well, we will certainly do exactly that. The last time, every time that we've asked Tiger up to now, we've been stonewalled. Because it's sub judice, but we shall once again. They've now got a new chief executive. What was his name? McDowell or McDougall, I think the last guy. Anyway, he's out the picture. So there's a new chief executive. Maybe they'll have a change of heart, but certainly we'll see if we can get them next week. David, thanks as always. Sorry for a little more of your time, and to everybody listening, we do apologize for overstaying our welcome today, but I see most people stayed with us, so clearly the welcome was not overstayed. It's been a pleasure. Stu, before we leave, could you just enlighten us on how we can get the recording of this?
Excellent, thanks, Alec. I hope my sound is coming through.
Perfect.
Yeah, I put the YouTube link onto the chat box, which is on the control panel. We'll publish it as soon as it's processed off the GoToWebinar system, Alec, and we'll put it live on the YouTube channel for people to access the full show. And then obviously for the premium members, the team cuts up the individual interviews and posts them in the premium section with some transcripts for those who'd like to read through the stuff. So that's the process from here, Alec.
Well, we only have premium members on, so.
True. So exactly, good point.
the transcripts will be available in the next few days. I'm sure that you found it as fascinating as I did, and thanks again for being with us today. We seem to be getting record turnouts at these Monday webinars. I'm glad we've kept it only to Biznews premium members, because otherwise we wouldn't get around to asking most of the questions. For those of you who did ask questions early on of David, there were quite a few, in fact, about the big picture, we'll actually ask him next week before we even kick off the show to answer those. Thanks again. Look forward to being back in your company on Monday. And, in fact, tomorrow, we've got a sponsored webinar tomorrow, haven't we, Stu?
Yes, Alec, thanks. We've got the sale webinar with looking at investments into Montenegro from an investment and golden visa point of view. So it should be fun at 12 o'clock, same time.
Yeah, so same time, but that is that's free to all. Free, yeah. Montenegro, I don't know much about it, apart from a guy who I think was a MIT professor of media, who has that as a surname and was very famous for predicting all the changes that we're seeing in media at the moment. But outside of that, the country itself, we're going to find out lots about it tomorrow. From me, Alec Hogg, and my colleague Stuart Lohman. Until tomorrow. Cheerio.